Hello traders, Gary Wagner here just after 11:30 in Honolulu, 5:30 in New York. It is Wednesday, 9th day of August, 2017, and this is the Daily Report for Gold and Silver. The war of words continues as statements made by President Trump yesterday ignited a fire. The commentary coming out of North Korea now is that they're considering Guam as a target. We are certainly getting to a level of critical implosion, and that has affected risk-off investments, safe haven investments such as gold and silver, taking off dramatically and gaining tremendous value in a single day. Gold, for example, closed at $12.83. That is basis most active December's contract and also the contract that we have currently a position on. That's a net change of almost $21 on the day, or 1.5% gain. Silver, on the other hand, gained about 3% on the day, closing up 54 cents higher, just a shy tad under 17, closing at 16.93. Interesting side note is that the US dollar, which had always been a safe haven asset, a move to liquidity or a move to the dollar, was something that you would see at the same time with gold. We're not witnessing that today. The dollar is actually trading nominally lower on the day at 93.43. It has affected U.S. equities taking small hits in the market. Dow Jones Industrial Average, though, still maintaining itself above 22,000 at 22,048, down 36 points. 63.51, down 18 points in the NASDAQ composite, and the S&P at 24.74, a net loss of 9 points on the day. Recent threats by North Korea, President Trump's response yesterday, and then the response to the strong statements made by President Trump today by North Korea has really moved the financial environment back to a risk-off environment, favoring gold and silver, with the dollar lower, equities under pressure, and major upside moves in gold and silver. Yesterday, we spoke about the fact that we really wanted to position ourselves into a long trade because it was my feeling at the time that, at least on a technical basis, we had pretty eloquently held the current level that we were looking at, which I believe was a 23% retracement at 1262. This, of course, is a 38% retracement, but the reason that it is a 38% retracement is this particular retracement sequence starts from about 1300 and goes down to about 1203, whereas the other fib retracement I had simply looked at this last rally right here, so it terminated at about 1280. That being said, we sent out a special trade alert that read, major breakout in gold, trade alert, buy gold at the market. Future traders buy the December 2017 contract at the market, which was currently trading at 1269.90. I also included a chart, and on that chart I talked about placing a stop just below 1255. 1255 is the low of this particular candle. In fact, let's go ahead and blow that up a little bit so you have a better idea. But that's this low right here. The low here is 1257. I put it below 1255. Now, that was last night. Today is a completely different story, with gold currently trading up almost $20 on the day. This tremendous upside move has spiked the price of gold from where it was yesterday to its current price at $12.82. And that is basis most active December contract. That switch took place over the last couple of days, and that is the contract month that we are currently trading in. We will look to raise our stops rather quickly now that we've seen this market really propel itself back into this former compression triangle. And what we want to see is, if in fact the market continues higher, which I absolutely believe it will, we will break above this particular resistance line. And at that point, I believe the next earmarked price that we're looking at in gold is going to be about 1,300. I also believe that should this war of words escalate, and I believe that it will probably get worse before better, and obviously believe that it will be solved peacefully, but we are going to challenge these most recent tops this year that come in just shy of 1,300, and in both attempts, the market was unable to take that out. Now, last year we had a high of 1,380, so the range between 1,300 and 1,380 is the area that we will absolutely look at as a exit strategy. The first thing I want to do is see how much distance we get on this trade and raise the stops, and then we will begin to talk about our exit strategy for our current trade. And traders, we're looking at a weekly chart, and I have the old fib retracement that will now have to be adjusted because it came to this former high under the assumption that we would see some sort of a retracement. If you recall from recent days, we talked about the fact that there was a real probability that this 23% retracement would serve as the low if in fact the market found support, and this was a pause in the upward momentum that existed in this current rally. Now, considering the most recent action over the last couple of trading days, we can absolutely see a engulfing bullish. That's the candlestick pattern that is formed off of this weekly chart. And even more interesting is that when we convert this to a daily chart, let's go ahead and do that, we'll get another interesting pattern. And the pattern that we're going to see is a variation off of a three-river morning star. What I mean by that is you do not get basic criteria of after a defined downtrend, because certainly this market had been in an uptrend. However, you do get a large red candle. You get double stars gapped below the body of that long sell-off. And then, of course, today's upside move completes this variation. There's a couple of reasons I'm labeling it a variation rather than just a three-river morning star, and the reasons are as follows. First, it's a double star at the bottom. Second, it did not occur after a defined downtrend. However, it still is indicating the potential for higher moves in the market on a technical basis. My recommendation is to maintain your current long position in gold, maintain your current stop level. We will be moving that up at some point this week. And traders, there's a other interesting fact, and that is the fact that we certainly went into a risk-off environment that will favor safe haven assets such as gold and silver. But one of the former safe haven assets, and I say former because it is not reacting as such, is the dollar. We usually felt that a flight to quality meant moving into the dollar. Now, the dollar is down nominally today, only about 0.1%. But as I spoke about over the end of last week and the beginning of this week, we've got this long and defined downtrend. We have an exaggerated low that came in, and then the market did close higher, this, of course, being last week. And my sense was that we could see some sort of a bounce, but in most likelihood, it would be a dead cat bounce in that we would witness lower pricing on the dollar index. And traders, lastly, it certainly seems as though the market sentiment has shifted, and that has affected traders in U.S. equities because we have seen these equities run so dramatically to the upside at such a furious pace that we expect certain lulls or certain retracements. We haven't gotten any deep retracements. However, today we do have the Dow Jones Industrial Average trading off by about 36 points, but still well above 22,000. The overall effect to the equities markets is to be determined, and right now I'm not convinced that we will see a full-blown correction or retracement due to the current war of words between North Korea and the United States. Traders, we sent out a special trade alert yesterday afternoon here in Honolulu about 8 or 9 o'clock on the East Coast, and of course, depending on your time zone, at different times. Traders taking that call got in at roughly 1269, 1270. That is basis most active December's contract. Market now substantially higher than that. Now, our stops are at 1255, but with the kind of move we witnessed today, we will quickly look to adjust those stops. I want to see how the dust settles in this scenario because my honest opinion is there is a high probability that this crisis will get worse before it gets better. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.